Let's
Let's do it.
start the recording for the Stinking Wizard with priorities.
Yeah, he's watching Liverpool, isn't he?
Yeah. Let me share my screen.
All right, for some, innit? Some people just don't want to put in the hard work.
Yeah, lazy bum.
I'm doing exams and I'm still here. Do you know what I mean?
I hope you guys
Exactly.
can see the screen and just share it.
Yeah, just need to just click on watch stream. Yeah, I can see that now.
So today we will go over the way I have been taught. So that's strictly daily 4 hour time frame.
Okay.
Let's start a little bit of theory. It's the same principles as Brutus actually. So with an impulse, we have a retrace, we have an impulse, and we have a retracement. The whole thing is that you want to enter on the formation of the high, catch the impulse, high here.
Yeah.
That's the whole premise. Dylan, can you mute your microphone, please?
Yeah.
Thank you. So I always talk in two verbs. Actually, you have a bullish M, or you have bearish W. So that means in an uptrend, bullish, we have an M pattern. It's a bit of a crooked M, but hey, you get the picture. And in a downtrend, we have a W. That's the whole thing we are trying to look for on the daily. You can do this counting candle for candle, or you can look from swing perspective. Later on, we will go into a little bit more real details. But the whole premise is that you're looking for that. Then we measure the retracement using the fib. The fib has a little bit of a different way than Brutus does it. Brutus does it, for example, here's the wick and here's the wick. Brutus will say, okay, you do wick to wick. The way I have been taught is you do wick to the candle body close.
Body, yeah.
So, but that's, I think, already familiar for you too. Because I've said it already. Then using the line graph, I will look for an optimal zone. That optimal zone will start from the 6180. So you will see there's no 50 level fib here. I can put on, for example, a 50 level, but because I measure not as deep as Brutus, it is not really a problem, because now you see I do wick to wick, and you see that it comes lower. So if you start overlaying it like this, then you see the 6180 line where it now is. It's also coinciding with the 50 line. So it doesn't really matter how you can do wick to wick, or you can do wick to body, whichever floats your boat. I prefer wick to body, but then I start looking from the 6180 and downwards. If you do prefer wick to wick, then just put on your 50 fib level, and that way you will have the same end result. It's just a personal preference.
Okay.
That's the whole premise actually of the daily. Then on the 4 hour, there are 4 different types of entries. I will show all of them in a minute. The first entry is a deceleration entry. I think Freaky, you already know what I mean with this, and I think Dylan also knows what I mean with this.
Yeah.
The next entry is a head and shoulders, or an inverse head and shoulders, which takes out the neckline. Inverse head and shoulders, but I will get into that also. Then we have, for example, a bullish M or a bearish W underneath the previous high or low, depending on the trend, and a head and shoulders or inverse head and shoulders, which does not directly do a neckline break or chock, but does it like a M or W. But I will get into details. So those are the one. Let's count. 1, 2, 3, 4. Yeah, counting is in my strong point. No, just kidding.
Should hope so. If you're doing trading, mate. Yeah.
Well, the computer has a calculator, doesn't it?
Yeah, fair enough. Yeah, fair point.
No. Yeah. So those are the 4 types of entry I look at on the 4-hour.
So with the daily and the 4 hours, obviously you're doing your analysis on the daily, and then on the 4-hour you're looking for entries on the 4-hour, or are you going to refine that even more so?
Well, during my mentorship, you enter also on the 4-hour. You can refine it further down the line to the 1-hour. For example, if you have a deceleration entry, for example, right here. So we have I need a different color. Let's make it black. We have 1 tap, 2 tap, 3 tap. There we do our entry, and you see like an impulse, pullback, impulse on the 4-hour.
Yeah.
Then you can refine it also on the 1-hour, and look here for your 1-hour entry like this. That's also a possibility. That's also personal preference, because then you know, okay, I have an impulse pullback, so that's like the start of a confirmed new push, because you have high, low, and then if you want, you can do complete Brutus style. Look here for your 1-hour refinement. That's a personal choice.
And then and then you'll say like, I assume like you're looking for the same sort of entry candles on the 4-hour that you would normally do on the 1-hour.
Well, that's the thing. These 4 types of entries I wrote here on the top left, they are patterns. So it's not a singular candlestick, it's a pattern combination of multiple candlesticks.
Okay. Just to further support the higher time frame trading.
It's a little bit more to weed out false signals.
Okay, so, fine.
For example, when we go into detail, like examples, you can have a first tap here, you can have a hammer candle here, for example, in your zone. You can have a hammer candle, and it can just fall down. But the whole premise around these candlestick, is it a pattern? It's a pattern combination, let's say it like that. I think that's a little bit better explanation. It's a combination of a certain candlesticks which can form a cohesive pattern that gives a more probability that indeed the price will reverse back up. So for example, it's an head and shoulders. For example, 4-hour head and shoulders. So head and shoulders is we come down, we come back up, we come down, we go up. This, let's drag it a little bit there. Let's go a little bit into detail about head and shoulders. This for me is a head and shoulders. And why is this for me a head and shoulders? Because we have an impulse. So we have a low, we have a lower high, we have a lower low, and then we take the last lower high. So that's a change of character. The change of character is the first indication that we can have
a reversal.
Exactly, for a reversal or change in order flow. So we had bearish order flow. When we took this lower high, it's the first indication of a potential reversal in order flow towards bullish order flow.
Okay.
So that's why I always also say in the group, a head and shoulder has to take out the lower
neckline.
High. Yeah, it has to take it out, and it has to come back. Ideally towards the region where the first shoulder was.
Okay.
And then also if you put a fib on it, you want the left shoulder to be in underneath the 6180. So for the fib for me is valid from the 6180 level all the way to the 100 level, but you want the shoulder 1 region here to be within the 6180.
That golden zone, yeah.
Exactly. If the shoulder is, for example, here, then it's not valid for me as a head and shoulder. Then you want ideally this to be a little bit further up so you can extend the fib. So this right here is the head and shoulder or the inverse head and shoulder pattern. There are some certain criteria. So the push away that breaks the neckline has to be direct, and it has to retrace also in one go. That's the hard criteria for the head and shoulders or the inverse head and shoulders. It's the same, just reverse.
So just to touch on like some of your experience with the daily and the 4 hour. I mean, how do you find that overall versus the 4 hour and the 1 hour, for example? I mean, which one do you prefer, and do you feel like the daily and the 1 hour, daily and the 4 hour is a better and more reliable overall? Is that how you kind of feel, or is it the same, or?
I feel that the daily in the 4 hour is more solidified, so there's less noise. So what I found out is that the 1 hour trades play out quicker. So for example, you hold a trade for a day, maybe 2 days, and you're done. When you have like a 4 hour entry, it is possible that you have the trade open for a week. That's a big possibility. But it's the same as looking at a 15 minutes in comparison to the 1 hour. You know, the 15 minutes can give false signals because the time frame is lower. There's more noise on the channel. And the same can be said for the 1 hour in regards to the 4 hour. The 4 hour is more solidified, but it's less detailed.
So you're going to get less entries, but there'll probably be much better entries overall.
Well, that's the caveat. If you do the daily in a 4 hour, you don't look at 5 pairs. You look, for example, at 28 pairs or 20 pairs or whatever. But the side thing is, if you do like on Sunday in the weekend, you do your breakdown, you will see that of the 30 pairs you're watching, maybe only 4 or 5 are interesting for that week. And you can color mark them, and then you can just put your alerts.
That makes sense.
You can just put your alerts on this line, and it's like, okay, we reach my daily zone of interest. Now I'm going to look at 4 hour. So that's a thing.
No, that's a fair comment.
So this is one type of entry. Another type of entry is actually the same, but instead of the direct push that takes out the neckline, it's a 1, 2, 3, and then it comes back. So I will draw it again because I'm a little bit too close to. So we come down, we make the low, then we have from this example, it's a bullish M. So you have the impulse, the retrace, and then we break the neckline, and then we come back for the second shoulder. So that's the two different types of head and shoulders or inverse head and shoulders I look at in regards to these ones. So it's the 1, 2, 3, 4, and here you look for your entry. So the difference is clear for both of you.
No, that's fine. So you're like on the first one, it's pretty clear cut that it kind of meets that golden zone, and the second one is obviously, you've got the structure that's changing, but you need that confluence to have it to come back into that zone one more time before you actually take the long.
Indeed. So it's the same principle. You take out the neckline, but it does so not in one push, but in a small interruption. So it's like push, pull back, then the push breaks it, and it comes back. And this is a bullish M.
Right. Yeah.
So that's those are both variants of a head and shoulders or an inverse head and shoulders that I look for on the 4 hour.
Yeah.
Dylan, you're following?
You got him to mute himself, so he probably.
Yeah.
Okay.
Still here.
Okay, perfect. If
Yeah.
if something you don't follow or whatever, just shout, say stop, explain, whatever.
Yeah, well.
Perfect. Then it has been a while since I've drawn this, so I have to think. We come down.
That's fine. Just take your time, man. It's not a problem.
We come down. Yeah, normally I look at it on charts, not as like perfect theoretical lines. So I have to think about how I'm going to draw. We come down.
Yeah.
We pull back. We come down to a low. This is our last high. Okay.
Yep.
So as you see here, a bullish M or bearish W underneath the previous low. This is the most risky entry of them all. But this is also probably the entry you will see the most, together with deceleration. What this is almost the same as the head and shoulders. So this is like a 1, 2, 3, 4, and then maybe the push. This is also that's going to be measured with FIB from the whole structure. Why is still the 50 on here? I don't know. Let's change it. So this is the bullish M. It's almost the same as we see here, but we haven't taken out the neckline yet, or the previous lower high in this case. So we're doing the bullish M, but we're doing underneath the previous high. We're doing the bullish M, and that's the reason why this is the most risky, is because this is our last high.
Yeah.
This last high decay, and this is our last low.
See, just based off that structure, you wouldn't be comfortable taking a long there. I mean, even though you can see that it's making that M, at the same time, like you say, it hasn't broken that
Exactly.
the lower high. So if in all intents and purposes, that could very well just be consolidation.
The way I see it is it can be relief for more downside momentum, because this is your last high, this is your last low. Everything in between here can be relief for a further push down. So normally we have impulse, counter trend relief, impulse. That's the way the market works broadly.
Yeah, that's exactly how I envision that chart, because it's weird. I mean, like, I would never have sort of looked at it that, oh, hang on, this can reverse just right now. I would never have seen it like that.
The reason behind this is what I've now drawn is a 4-hour. So, but on a daily, you would have already made your daily zone.
Yeah, I agree.
Right.
Yeah. So this is a daily zone of interest. So you know this is a zone of interest, and you're looking for a 4-hour response from this zone. Take it back, for example.
Okay.
This is also a
so if you would enter this, you would enter it on the last higher low, right?
Yeah.
Where your cursor is right now. Yeah.
You would look for an entry. Yeah.
Nice drawing.
Here, yeah.
Yeah, exactly.
Something like this, yeah. Yeah, this would be like your entry, looking at your entry, because you take the tip, and then you look on the line graph, you will look for a certain pivot point. The closest pivot point is probably here, your lower high, your minor lower high, and you can lay it at that point, or just round it up a few numbers to a round number. So for this case, you could have made it 560 or whatever. Psychological level plus 1 pip, because a lot of times in backtesting I see it's not touching, for example, a 550, so that's why you can plus it with like 1 pip to make sure you get tapped in. So this is also an entry style, and then the final entry style would be we have our zone, we come back, we tap the zone, and then we go off. So it's like a drop base rally, but you will get it in the form of a deceleration. So for me, it's a little bit hard to draw. It's easier to show. let's see. These are free, so nice slur. This is a deceleration entry. I will show a different.
Yes, the wicks on the 4 hour, weren't they?
This is
Yeah.
a better example. This is the perfect example. So I prepared some examples. These are currently still running or already have hit the target. I will clear this and I will go step by step how I would have caught this, okay?
Sure.
In the meantime, if you have a question, just say stop, explain. So as I said, the whole premise is we're looking for impulse, retrace, impulse, retrace. You can do this candle by candle. So you can count impulse, retrace, impulse, retrace. Or you can look at a certain swing structure, which we also will get in. So that's the two types, candle for candle or swing structure. That's just a broad market structure understanding. So we take it from the top wick to the bottom candle. And then you will look at your point of interest on the line chart. So I will start looking, get your horizontal line. Let's make it black. You put it on the 6180 here, and then you just drag it down until you find a piece of structure, like a sharp pivot point. In this case, this would be for me my first point. So what I do is just put a rectangle on it, go back to the candles, and I would draw my zone in the length of the wicks.
Okay, yeah.
So this would be my point of interest. One quick side note is the fib is always valid until the 100 level. But you see this wick here on the bottom. Price has already come back down here once and still managed to push back up. So that means there's a lot of liquidity there. So there's two ways of looking at this. You can drag your fib to the 100 level like this, and you put your 50 on, and you can say, okay, until we cross the 100 level on the 4 hour, I'm still looking for longs. Or you can say, the way I do it, is I call this like a daily fake out zone. That's my terminology. I just put an extra box on it. And I know, okay, I can still, if I get an entry pattern, the entry type we just discussed, I can have it also underneath the 100 level in this box. But if the 4 hour candle closes underneath this box, then for me it's done. I'm not looking for longs anymore. I throw it in the bin and look at another pair. That's the thought process behind it. Let's put it on the replay. I just put my alert here at the 1680 or at the zone. We come back down on the zone, my alert goes off. Okay, perfect. I go to the 4 hour. You see here break of structure. You can put that on if you want, or if you don't want, you don't. It's personal preference. So we come to the zone. Let's see what price does. So we come back down, we come back down.
This is. Would you say this is coming into more of a supply and demand type style?
In this specific example, you could say so, yes, because if you would do like a supply and demand, it will be this candle. Because this is the last candle before the initial push up that caused the break of structure. So you could also say this is your supply and demand. So it's funny now in hindsight, now that I know more materials, I start seeing different things. So you can also say this is a supply and demand.
I don't know if you guys followed Ben from Day Trading Addict.
I know him from YouTube. You mean?
Yeah. I actually purchased the first trading course that I ever did. I actually purchased his course, and the way he would teach it is where you marked the black candle before the up move.
Yeah.
He would have targeted the first blue candle that's on its way up as the demand zone, and then he would wait for the price to tap back into that zone before then going for the long.
It's logical because there's a lot of liquidity there.
That's
why it's a demand zone.
Yeah.
Yeah.
Yeah. So let's put it a little bit through. So currently there's nothing yet.
Yeah.
Because we tap the zone, we see 1 candle, 2 candle, 3 candle. So you could have placed an order here looking for a decel entry, but for deceleration entry, I would always like to see a opposite color candle.
Right.
So that means in this case, we have a first tap, a second tap, and a third tap. We have black candle,
Yep.
blue candle, black candle. So it's not like black, black, black. I like to see a mix of candles. Just like
Okay.
indication that the bulls are there, for example. So
Yep.
this is my first tap, second tap, third tap, and then I place an entry at candle close, and I do round it up. So I place this with a magnet to the bottom of the candle body,
Mhm.
and I round it up. So now it's 73843, so I make it 50. I
Yeah.
put a little box underneath it. So this would be my deceleration entry. And the whole
Okay.
reason behind this is these are 4-hour candles. So the price has halted at this specific level for 12 hours straight. It went a little bit
Yeah,
up,
that's
went a little bit
12
down.
hours of rejection, basically.
12 hours of rejection. If you want, you can also look for a psych level.
Mhm.
So let's see. There's a level here, coordinates. No, you can round it up to 800 if you want. Let's make it a little bit bigger and a different color. I don't see the color really that good. Blue. I think that's a little bit. So you see, price is halted here. So tapped it once, tapped it twice, little rejection, tapped it once, rejected off, came back. So price halted at this level, at the
Yep.
73800 level for 12 hours or even longer if you count all the candles, like 1 candle, 2 candles, 3 candles, 4 candles, like 5 candles, so like 20 hours.
Yeah, it's been 20 hours worth of attempts, but just not been able to break through.
Exactly. So that's how I would enter this. Then the candle closes. You just put your limit there, or you can do like a execution order. I've always done a limit because it will always bounce back a little bit, probably. Stop loss is I have tested this pretty extensively, and for me,
Yeah.
a pretty fail-safe method is the following: I drag it up towards the longest wick of the entry candle. So this is these 3 candles are my entry candles. So the lowest wick is here in this region. So
Yeah.
I drag it to the lowest wick and I look, okay, currently we are at 45 pips. What I then do is I round it up. So I round it up to 50 and then I
Okay.
do plus 10 pips. So I round it up to 60. 60
Okay.
pips.
You just give yourself some good breathing room there, just for it to
Yeah, so
dip in if it needs to.
you don't want to have it too tight.
Mm.
Sometimes if you do look for daily swing structure and you target, for example, the previous high, in this case it will be like a 5R, or
Yeah.
you can target the extension level, the first extension level, the minus 27. I never go
Yeah.
further than the minus 27 on the daily with a daily FIP level because that can cause a rejection. I've seen it a lot of times. We push up, we tap it, we come all the way down. So for me, the maximum take profit with a daily FIP is at minus 27. But that's personal preference because if you take out partials, like heavy partials, you can just let it go. Personal preference.
Yeah, no, I agree with you because Brutus, when he was doing fib entries, he'd always show a majority of his trades. They would never actually quite reach the top extension level.
Yeah.
Invariably, they'll always ever get to the 0 or like you say, just that point 27. It's very rare to see it go beyond that.
Yeah, I've had it sometimes, but you don't see it a lot. And the logic behind this is if you go to the 0 FIP level, that's the first opportunity where you can get a double top. So that's your first point
Yeah,
of
absolutely.
growth. To give you a before we go further with the entry, to give you the pro tip, this right here is the beginning of the correction. So you have 2 types of profits you can do. So because here this is where the daily candle closed, so this is a pretty heavy level. because we went up there and we came back and closed here. So we can round this down. So this could be your first profit target, because there is a possibility for price to reach this and just go back. I've had this on my 200k FTMO challenge. I was plus 9.2%. And we tapped the daily beginning of the correction and it reversed all the way back down and said bye bye, fuck you. Yeah. The second type you can do is look for exactly the same, the beginning of the correction, but look at it from a 4-hour perspective. So that's a personal preference. It's something you have to look at for yourself. So you can do it here, or you can do it here, the close of the body, and then round it down. So it's now we make it like 7, 0, 0, like this.
Yeah.
It can go way further, but just keep in the back of your mind, this can be a potential point of reverse. In this case, your RR will be like 5% plus. So I would say close fully close. If you reach it, fully close it, because it's enough, for a single trade, it's enough.
Yeah.
If you take partials, it would be like maybe 3.5%. It's personal preference. Do whatever you want. So this is how I would set up a deceleration entry. So now we have the next candle, which taps us in. Next candle, next candle. It came back down. You remember where the beginning of the correction was before? Right here. You see the reaction? It tapped it. It pushed back down. So this was, you can also say this is now the retracement for the next leg up. Very big possibility, but it was also possible
could you mark that as a deceleration of the up move then?
Yeah, you could, but you go with the daily driver, and the daily driver is bullish at this moment, so you're only looking for longs. If you want, you can also say this is the last bullish candle before impulse down, but this impulse down didn't break the previous low. So this is not a valid supply zone for me, because a supply zone is something that causes a break of structure or a change of character. So you can look at it always from different perspectives, But in this example, the driver is bullish, so we're looking for longs. So then we're not looking at it from that aspect. We continue. You see, take profit hit for 5R. That's an example.
It's not bad,
yeah, and it just took a little bit longer, because this would have been your entry. So this would have taken 5 days and 8 hours. So an entire trading week.
Yeah.
Okay, yeah.
I mean, now we've been waiting for 10 days also, and
yeah, but that's what I just said. That's the difference between using 4 hours for entries or a 1 hour. A 1 hour goes quicker. Yeah, it's also a personal preference, but because it also has to fit in with your lifestyle. Because if you have like normal work, a 4 hour is way more preferred to trade, because you only have to look at a candle close every 4 hours. So for my time schedule, so for you freakies, like minus 1 hour. For me, it's like 7 a.m., 11 a.m., 3 p.m., 7 p.m., 11 p.m., and then 3 o'clock in the morning, which I don't do because I sleep. So it's all rotation. So for you, I think it's like 6, 10, and 2 freaky.
Yeah, no, I think that's kind of one of the issues that I have. It's just I don't really have the time to actually just sit around staring at charts all day, because I'm just so busy with work as well. And just finding that sweet spot where I'm more than happy to look at longer time frame trading, just purely from that aspect that I don't have to look at charts constantly. Do you know what I mean? So I think that's why I'm kind of like more sort of open to the ideas. And again, it's like you mentioned earlier, it's the lack of noise that you have to deal with as well. You look for your entries, you know exactly what you're looking for. If you find it, great. If you don't find it, fine, move on to the next one. And it's just having that kind of thought process and just saying, all right, I know what I'm looking for. can I achieve it on the 1 hour? I can't at the moment because I don't have the time for it. But
just go time frame up.
yeah, exactly, and that's kind of where I'm sort of going with it all. So
the principles are the same,
the principles,
yeah, doing a 4-hour structure and a 1-hour entry, or doing a daily structure and a 4-hour entry. It's the same. It's just what fits your lifestyle better.
Yeah. This is it.
Yeah, you could also maybe have entered this on a candlestick. I don't know. Maybe you could have used this hammer candle here. Then this would be like a Brutus entry, like a hammer candle, volume spike, and the RSI. I personally never use volume on the 4-hour, and the reason for that is every 4-hour candle has almost an opening in it. So this current candle is a 7 o'clock candle. This has the Frankfurt open and the London open candle. Then the candle after that is always lower because there's no opening in it. And then the candle from that, for the 3 o'clock candle, has the New York open in it. And the candle after that has no open in it. Like Australia and Asia. So it's always the same. You have London and Frankfurt open, the lower, New York open, lower, and then you start ramping it up. Down, up, down, up, down. So that's why volume for me on the 4 hours useless. So that's maybe something to keep in mind if you were tempted to look at volume on the 4 hours.
I can see that biting you in the bum. So to speak. What about stock RSI then on the 4-hour?
It can be a nice confluence, as Brutus always says. If you can line up your 1-hour RSI with the 4-hour, that makes the move more powerful. Because as he said, the RSI on the 4-hour is more powerful than on the 1-hour. That's what he always said to me. So in this example, if you have like a deceleration or whatever, and you see the RSIs in the bottom, it can be a nice confluence. I've backtested it, and let's say for every 10 decel entries, maybe once or twice the stock RSI wasn't there.
For how many?
Like 2 times out of 10, the stock RSI wasn't there. So
right. Okay.
A lot of times it's there.
Actually, that's pretty good statistics, to be fair.
Yeah, it is. It can be an extra confluence, but if the stock RSI wasn't here, I still would have entered the trade probably. Of course, it's like up here. Maybe I would stretch my mind, the back of my head, but I never used to look at the RSI until I came across Brutus. So, that's maybe also something. This strategy that I have been taught during the mentorship I had for 6 months, we never looked at a single indicator. It's all pure price action.
Yeah.
So this is an example of deceleration. Currently still hovering around here, so maybe it will go a little bit higher. Who knows? Let's see. EG. I think this is also a nice example. This is one I put like the sell box thingy on yesterday, but I didn't have the balls to enter it because it has been a while since I've used like 4-hour entry. So I was like, okay, I will just place it, watch it, build a little bit of the confidence back up, and then I will maybe start using the system again. So that's always my luck. Let's say luck of the Irish,
Luck of the wizard.
Luck of the wizard.
That's a fantastic entry, to be fair. If you look at it like this.
Let's do the...
Jeez. Yeah.
So if we reanalyze it quickly, with a high, actually we can do it. We can look at this entry, and also I want to focus a little bit on this area here because we can do that later. Here is also a perfect head and shoulder example. So I want to also look at this part right here. For some reason, I'm now pointing at my screen as if you can see it with my finger. Okay. So with a high, with a low, with a higher high, higher low, higher high, higher low, clear high. This was like, I think, the news, like was it the Bank of England news, like buying a bonds or whatever. big
yeah.
It's the big spike. Then we see here, this is your last higher low, and we see a candle body close beneath the low. So this is like change of character. Change of character, as I said before, can be the first indication of the start of bearish order flow. So from this point, I can start looking in this example for a W, bearish W. So we start at the top with our impulse, our retrace, an impulse, and a retrace. You guys see it?
Yeah.
Red candle, blue candle, longer black candle. So it's this is how it looks. Yeah. So we do our fib from the top wick to the candle close, candle body close of the second one, and we start looking at our zone. You can do this as I just showed before, and then you would have had your zone all the way up here. That's a little bit big for my preference. That's why I refined the zone in the 4 hour. So on the 4 hour, I made it like this.
Yeah.
So price came back. You would have put an alert here. You tap the white zone, and when you tap the white zone, that's when you go to the 4 hour. Actually, to be really like mechanical, you don't go to the 4 hour time frame until your daily zone has been touched. When your white zone has been touched, for my example, the daily zone is the white zone, then you go to the 4 hour looking for an entry.
Right. Okay.
So
you're looking for those two kind of boxes to kind of align, aren't you? So
it's not really that I want them to align, but it's nice if my pattern coincides within my box, because the box is the daily zone, like the daily liquidity zone where I'm interested in.
Yeah.
So it would be nice if they overlap, and not that it's going like here. It's possible that the box would have been here, for example, because this would said this zone is valid. Maybe there was also a zone here. You don't know. It can just break, you know. But then you just move your zone and look for the next zone, because it also could have been here, or maybe it could have been here. It depends, you know.
I guess it's kind of like draw your rough outline on the daily and then get onto the 4 hour and then refine it.
Yeah, I always look for my daily zone on the daily. I don't refine it really on the 4 hour. But in this particular example, because the zone is so large, because I do the length of the wick, I did refine it a little bit on the 4 hour. But normally, if we would have blasted through here, I would have
you wouldn't need to. Yeah, no, fair enough. Yeah, that makes sense.
And I always look on the line chart. So I always look for these sharp turning points, because these are pivot points.
Yeah.
That's always maybe a nice little trick. Look at the RSI, for example. You see here, the RSI clearly wasn't there. Maybe on the ladder, the first.
Ik zie een optie, fruitcompagnie van Essen.
Maybe the first. My theory just went off. It was like, yeah. Maybe the third candle, but you see the RSI wasn't really there. So that's a nice example that the RSI isn't really necessary for this one.
Yeah.
So it's the same as just, we have a really strong impulse, we leave a wick behind, then we have a doji candle with a wick behind, and then we have the third candle with a wick behind, and it's also one of opposite color. That's enough for my entry criteria. I put it on here with the magnet tool, I round it up. In this example, it's already a round number. I just move my tool one to the side, and I look, okay. It's 21.8 pips, so I make it 25, and then plus 10, so that makes 35.
35, yeah.
35 pips. Also a really nice round number, 888.
Yeah.
And this is my first target, the beginning of the correction. How did I do the beginning of the correction? As I just showed you before, put a ray on the daily candle close and round it up. So it would be the 800, or you can do it on the 4 hour. And then
Yeah.
We'll round it up to like 50. So that I think there's like a 5 pip difference in the end. So in this case, it's like or 4.7 or like a 4.8. So then I would go with the daily because there's always a little bit more weight behind the daily.
Yeah.
You only lose like 0.2%. So don't be. I don't want to be greedy, you know. So this is how this trade is.
Yeah.
And currently it's still running.
So the entry criteria is you want multiple wicks in one area and then the first candle of opposite color.
Yeah, I want three taps in the same zone.
Yeah.
With the wicks. The
Yeah.
candle body can also close a little bit higher. It doesn't really matter for me. And as a confirmation, I want to see that there's in this case like bearish pressure is present. You know.
Okay.
So I want to see like a black candle. If we would have done the opposite, I would have liked to see a singular blue candle being one of the 3 candles to see like, hey, there's bullish or bearish presence.
Yeah. Yeah. Got it.
Yeah.
Yeah, makes sense.
Later on, I can, if you want, I can send you the complete trading plan I've written out after 6 months because it's in Dutch. You can read it.
Yeah.
That has like all the entry criteria for all the patterns where you have to look at, etc., etc.
Yeah, that'd be sweet. Yeah, I'm quite interested.
That'd be awesome, mate. Yeah, thank you.
It's Dutch freaky, so if you want, I can.
I'll copy and paste it into Google Translator. Then yeah,
that's gonna be weird. That's just gonna be weird.
Yeah.
Yeah. So this is also a currently running deceleration entry. I always go break even at 2% profit or at a 0 FIP level.
Yeah.
No, I'm lying. Excuse me. I go break even at 2% or with every other entry except diesel, you use a FIP, like the 4-hour FIP. So the white FIP is a daily FIP, and for the other entries, I use a black FIP. It's a 4-hour FIP, and on that minus 27 level, I go break even. So if there was like a 4-hour here, then I would go break even here. But that's depending on the other entry styles in which we maybe we'll get today or another session. Maybe another session because now we do decel, and then maybe some other sessions we can do the other ones. Because if not, it will take a really long time. So this is also a deceleration entry, which is currently playing out pretty nicely, I think. I think there was also one. No, it's not this one. This is one I place a limit on, or which I'm currently in. This is a bigger one. So this is a nice swing example. So you're not counting candle for candle, but this is a swing structure trade. We have an impulse, we have a pullback, we have an impulse. So we have a FIP, and we identify our daily zone. So I have to make it white. This is our zone of interest. We tap our zone of interest. We go to the 4-hour. I also put on this line here. It's a psychological level. As you can see, it's 1.11900. The candles are resting, I think, pretty perfectly on it. And I always mark my last high. So this is my last high. I always do it so that you never forget, you know. That way you also know if you're going to look for certain patterns, whatever. But it's also diesel entry. First tap, second tap, third tap. This is a blue candle, I think, if I'm not colorblind. Yeah, it's a blue candle. And it's the same as I just showed you. But this is a nice example. This is a swing example. So you don't need to target all the way up here. You can, but it's like an 8R, so that's pretty big. I always say if I have like a 5R maximum, I take it. So that's like here. So
you're just basically looking for the next sort of incline up, aren't you? In the chart.
You could say this is a high, this is a low, high, low, high. You take this low, with this impulse, with a break of structure here. So this is your previous high and this is your new low. So then you can say, okay, if this is my previous swing high, you can use that, for example, as a target instead of maybe going all the way here. Or you can say, just take partials. For example, if you're at this level, you're at 2%, you go break even. If you go here, okay, I'm like, let's see, this is a nice level here. Okay, I take out 2% maybe and move my stop loss also to here maybe. Then you have taken 2% out and your stop loss is like a percent in profit, and you can just be like, okay, I'm going to let it run, whatever. That's personal preference.
Yeah, I mean, Brutus quite likes taking partials as he's going up, but I must admit I actually prefer how you do it, Dylan, in that you kind of trail that stop loss all the way up.
Yeah.
Because you can maximize your profits a bit better.
Yeah, and that's the thing. You can, yeah, that's how I like to do it. You can trail your stop. So as I said, you can do how I would do it is, okay, here's like 2%. There you go, break even. Then you just look at the structure. Okay, this can be like an okay level. So normally here's like a tree. You can take out like a third partial. So that means you take out 1%, but you can also move your stop loss like 1% in profit. So that would probably be like here-ish. So something like here, and then you can go, okay. So now if it comes back down and hits my stop loss, it's the same as going as when it hit my break-even point. And then you can just try it. You can say, okay, here's my next high. I'm at 4%. Normally, if I would have taken out like another third partial, maybe it was another percent. So you can put it like here.
Yeah.
And it's a personal preference. You can also say, if we impulse away and we retrace and we impulse away, you can also put your stop loss then beneath the current low.
Underneath the yeah. That's kind of how I would do it, and so just wait for the next low, a higher low to be made, and then
you
just keep climbing up with it.
Yeah. You can just ladder it. That's also a thing how you can do it. Every time you cross, you make like a break of structure. You go, okay, where's the low? I put it beneath the low. I've seen people doing it this way. Mentors from the company that taught me, they really swing traded. They had like a position over for like 2.5 weeks, but they gained like 19%. So,
well, that's brilliant. I mean, why would you not want to? Yeah. But why would you not want to trade like that? I mean, if it's continuing in that direction, why not keep going with it?
Yeah, and that's like really optimizing the process of letting your winners run and cutting your losers short. We always have like a fixed stop loss for like 1%, for example. So a lot, if it goes beneath that point, the trade isn't going your way anyway. So you want to be out of the trade and whatever. But maybe you can take here like a 5R, but God knows, we know the daily likes to complete a -27. So maybe it's like a 12%. So when you start using a trailing stop and you give it enough room to breathe, but also for yourself to be comfortable with it, that there's not too much percentile based swing, you can just let it go. It's the same as taking partials and let it go. You secured your partial already with your trailing stop. But that's something. It's really personal because my emotional bandwidth isn't your emotional bandwidth, or vice versa.
I agree with you. I think there's I think when you first start into this game, I think a lot of people are just like, I want to scalp. I want to do it as quickly as possible, and that's kind of like everyone's mentality. So
I've never scalped in a day in my life.
Yeah. I pretty much started off that way when I first got into it, but yeah, it takes a bit of experience, a bit of mental fortitude, all that kind of good stuff. That once you kind of get to that region where you think, what, I can't really limit myself in the lower time frames, so it's just kind of like I can't do anything like that. Just got to have to keep improving, find other ways to just improve the quality of how we do this, and it does ultimately come down to the higher method, the higher time frames. I just find that it's just much more resilient. It's more it's less noisy overall, and just with that whole nature of that true swing, just like you said, you can get up to like 19% in a trade if you really just understand pure price action at a basic level on the higher time frame.
Yeah,
It's often all you need. You don't even need to do as many. You don't even need to do as many trades as the next guy. I don't know, with Brutus, he always says if you do the 1 hour entry, you're looking at trades lasting anywhere between 6 hours to 6 days. Whereas something like this, your starting point is probably 6 days, and then you're looking at maybe 2 weeks.
Well, it depends.
So
For this example, it's like a swing,
yeah,
big daily swing. So before this, for example, can hit like the beginning of the correction, we're talking like 300 dips. So that will take some time, because
yeah.
you see how many candles it took before you got here, So
Yeah, absolutely. It's
correction was
probably be the
almost
same amount,
this is like 12
going back
days.
up again.
Yeah,
Yeah,
just going from this high to this low is like 12 days. So that's
yeah.
like
So that's essentially
two and a half
a
trading days.
2 week trade, basically, isn't it? Really?
Yeah.
Yeah.
So that's always different. You have the swing and you have the smaller ones. The smaller ones I just showed you can be done in like a few days. This, like a swing, can take weeks.
Yeah.
I think those were the current.
Is that your preference then, Dylan? Is it a daily and 4 hour? Is that your preference time frames?
Well, today was a little bit of a tough day for me. Let's say it like that.
Yeah.
And I looked myself pretty hard along in the mirror, and I was asking like, where do I feel most comfortable?
Yeah.
I think my downfall is that I consume knowledge pretty well. Let's say it like that. But that's also my Achilles heel.
Do you also feel that it's knowledge overload as well, isn't it?
Because I can look at a chart and I can explain 10 different strategies to you, but the strategies can conflict with one another, and that gives me a little bit of noise. Like how do you call it?
Just overkill.
Circuit overload, or whatever you want to call it.
Yeah, absolutely.
Malfunction. That's it.
That's a very, very it's a very tough situation to be in, because obviously you're trying to make sure all these confluences all align together, and that's kind of the reason why you do it in the first place, right? It's not you're not doing it just so you think you've got so much knowledge. You're just thinking, okay, if only I can add this and that works with this, if the fib works with the supply and demand zone, that would be just epic and all that kind of stuff. And then you start adding RSI in there, volume in there, and it's just like
and the more you somebody told me this the other day, or it has been quite a while. Every trader, when they first start out, they have like a little bit of a lucky streak, and they're like, "Okay, I can do this,"
Yeah, everyone's like, "I've got this."
But I haven't done shit for it. You know what?
Yeah.
I'm gonna consume every knowledge there is, and then of course, I will be better. And then everybody goes downhill, because the more knowledge in this line of work is better. It's nice to have understanding and multiple points of view that you can always adapt to the market.
Absolutely, yeah. It's that saying, isn't it? Analysis. Yeah, it's that saying, isn't it? Analysis paralysis.
Yeah.
That kind of the more you do, it's just like it actually stops you from actually just getting in and just getting on with it.
I think also like having so much knowledge about what everything could be doing, like sort of gives you this false sense of, oh, now I know what's gonna happen next, and
you feel a little
it just
maybe.
Like you think, oh, and I know what's gonna happen, I know what it's going to do, and then you just get smacked in the face, like, oh fuck.
Yeah, the
market. I still know nothing, and
it's just.
I think in certain regards, ignorance is bliss. Also,
yeah,
just find one thing that works and just don't look at anything
it's exactly
else.
That. Yeah, no, I totally agree with you. It's exactly that. You just stick to a plan.
Yeah.
No matter if you win or lose, you just stick to that plan and keep delivering it.
Yeah. So I will probably be going back to the daily in a 4 hour, or I already decided for myself. But you can also do a little Brutus in here if you want. So for example, this is 4 hour. When we take this high, It's a change of character. So Brutus would say, change of character. So Brutus would say, change of character, you wait for the retracement, you identify a zone, you look at the 1 hour and you go. You can still you can still do this concept. You can use it maybe as a skill in whatever you want.
It's basically further refinement, isn't it? Just
it's a further refinement.
By the way, Dylan, are you in this trade right now?
Yes, I am.
Actively?
Yeah, I can show you. Wait.
Yeah, you don't have to, but
I will show you, bro.
On trading on my MT4, it has like this huge wick in the bottom.
Hey, where is it? The fuck?
Software was that?
Wait, can I share my screen?
I think he's gonna have to disable his screen.
You're not in this trade anymore? I'm sure I wasn't. 100% sure.
Yeah, it's on the Traders Global. It has a wick down to.
Fuck off! Really?
Yeah, to 11591.
It took me out. I don't even see it here on the dinges on.
Oh, because it's also not on my trading view.
Yeah, it took me out. What the fuck? Yeah, juice. Wow. If I look at
huge wick.
There's a huge wick underneath it, like properly huge, like going down to 11,600. So going down to here.
Yeah.
One huge wick, but only of course. And now we'll probably reverse. So nice example. Liquidation wick probably. Yeah, it went down really fast. Okay.
Which one was that?
Well, you can't see it on TradingView because TradingView didn't even list it. But on MetaTrader, it tapped me out. Maybe I can show you when I open MetaTrader. It was AUD NZD. Yeah, you can see it. This wick here.
Oh, bloody hell! Okay.
So one big wick.
Son of a wick.
Son of a wick. Yeah. Some of this stuff really
strange.
Yeah. Screws with my head, man.
Yeah. So that was another 0.5%. So now down officially 3%. Okay. So got liquidated.
What entry was that for you then? Was that a 1 hour entry for you?
No, it was a 4 hour entry, just exactly as you see it here. It was this trade.
Right. Okay.
But it wicked down all the way till 11, like somewhere here. This line. But it happened so quickly that TradingView didn't even register it. That's how quickly the wick went up and down. I think.
Yeah.
Yeah. But that's a funny thing about deceleration. Deceleration in and of itself isn't like a pattern. So we can have example like 1, 2, 3, and look for an entry here underneath the high, or we can have an impulse up, and then we can do like a fib, and then it can be like, okay, here's your shoulder, here's your head, here's your second shoulder. So there's still a lot of possibilities left, It can happen. It's part of the game, But that's. I was just testing this out because normally I don't really like taking huge swings like this with a deceleration. That's why I also only put like a 0.5% on it. To be the most safe, you wait for a confirmation, or you wait for a pattern to show up, or you wait for like a break of structure. So you wait for this high to be taken out, and then you wait for it to come back. And this can be 1, 2, 3, something like this, or it can be like a direct break, or it can be like 1, 2, 3, and then come back. Then you have a little bit more confirmation that the trend will turn instead of deceleration. Deceleration works really good, and I've seen also during backtest and live that it works really well also on the big swings. But it's personal preference, To be more safe, you can wait for structure to form, and then for the smaller things like this, perfect. So this personal preference, because here you see it's these are smaller patterns and it works pretty good.
Yeah, no, I really appreciate that, man. No, thank you. That's actually been really useful. Just different waves of sort of looking at it, but ultimately, like you say, it's still at its core that price action strategy. So
yeah, you can bind it together as you want. You can use the daily in the 4 hour, and then you can also wait for the 4 hour to also align with the higher time frame. So as I said before, you can also wait for this high to be taken out and look for an entry here, or you can wait for the second high low and you can look for your entry here. So that you have like the M. Then the 4 hour has properly aligned with the daily, and then you can look for longs. There's different styles to it, whichever you prefer. So we went a little bit in depth about deceleration and how I personally look at the daily time frame. I think we'll call it a day for today. And, let's do another session when you guys want regarding the other types of entries, and I can show. Oh, my screen is freezing.
Yeah, no, that's fine, man. No, thank you for going through that. That's been very useful.
Yeah, because I also have a lot of examples for other types of entries. So like 1, 2, 3 entries, like the head and shoulders and other things. So I have examples of screenshots to maybe make it a little bit better visually. So, but let's do that another time.
Yeah, awesome, man. Thanks.
Yeah, no worries.
Yeah, no, thank you, buddy. Appreciate that.